Hey guys, it's Boris. Welcome to the weekly technicals for the crosses for July 25 to 29th. A very, very interesting week in the crosses, I think, because a lot of patterns are becoming to emerge. And in many ways, I think the crosses are starting to show some most interesting setups of all. Let me just go through all of them just step by step of what I think are the hottest looking crosses as far as potential trades. Aussie Kiwi clearly showing a very, very serious failure at this 108 level. This is all really about the fact that Aussie is starting, we've had, of course, a knockdown in the Kiwi, but now with the coming up of the CPI data, this is really going to be the key trigger. If we have a failure of the Aussie, because CPI data pretty much makes the market convinced that the RBA is going to cut in August, this pair really looks to be on its way towards the 106 and a break of the 106s. There's a clear failure here at the 108 double top, very much worth looking at as a potential trade here. That's one of the stronger setups. The strongest setup, though, I think, in my opinion, is the rollover, just the absolute rollover of risk in Euro-Yen. You can see the Euro-Yen tried 17, 18 several times this week and just kind of bunched up and now it's starting to really roll over. The critical thing here is a break of the 1600 really decelerates us very quickly to 115. This is really basically a trade on whether they take profits in dollar-yen this week. In addition to which, of course, that the euro just simply can't get off the mat. So I think it's going to be driven primarily by the yen cross with a small support by the euro. It's not really going to be a big drive on the euro side, but still looks very, very interesting. And in many ways, a clear barometer of all the risk in the market. If they come back and take out the 118s to the top side, clearly risk is back on. And the setup is reconfigured completely the other way around. But for now, the setup looks to be very much a move to the downside, and that's very, very much worth looking at as a potential trade. And the last thing that's sort of interesting is also the Euro-Swiss trade. Also, sort of, not a pair I like to trade a lot because of the SMB, but at this point, also signaling a very clear deterioration of risk or deterioration of euro. This is in many ways not even so much a risk trade as a safe harbor trade, right? Because we've had all of these exogenous shock to the Eurozone from Brexit, Italian banking crisis, now the terrible events in Munich. All of that is starting to really batter at the Euro-Swiss. Now, of course, the danger with the Euro-Swiss is that the Swiss authorities really do not want to see it back to parity, so they're going to do everything in their power to probably pump up the pair. But still, the market is pressing it down, and I think there's some potential here for near-term trade. Until the authorities really get worried. Let's take a look at the charts here and just see how everything sets up. So first, with the Aussie Kiwi, you can really see the Aussie Kiwi failure here, a series of lower highs. The 108 can't even get touched, and we're now back down towards the 106.46. This 106 very key support. That's the level that I think everybody's going to be watching very carefully. We have the Australian CPI. That's going to July 27th. That's the mark. That's going to probably make or break the support level here. This is a very decent support, but if we fail support here, it really can pull us right back down towards that 104 level as the market starts getting negative Aussie, and pretty much has priced in most of the negative Kiwi. Remember, even if Kiwi, even if RBNZ cuts, and if RBA follows, the spread between the two still favors the Kiwi, and that's what makes the Aussie Kiwi such an interesting setup at this point. The next trade is, of course, the Euro-Yen, and you can really see the rollover risk here. Here's a very, very good view of how the technicals are really communicating to us that there's a rollover of risk here. They just can't get it up above the 118 level with any level of conviction. There is some pretty nice chunky support at the 116. The pair has tested this 2 or 3 times over the last 3 days, has held. But a break of the 116, I think, very quickly accelerates us right through the 115 level. Now, the 115 is a stronger support, both psychologically and physically on the charts here. But there's still quite a lot of more room here to the downside. The way you know the trade is completely wrong is if 118.50 gets taken out. At that point, the trade then really becomes a move towards the 120. It's all risk on. It's the market feeling very good about whatever QE BOJ decides to produce, and dollar yen itself moving well towards the 107 and 109 level. That's the key driver here. It's really a yen trade through the euro, but it's an interesting one. I think it's really worth watching. And then the last thing is the sort of safe harbor trade here. Again, euro getting just shocked on all of these exogenous risks. We failed the 108.50. See, again, here's a very, very good technical setup. So we rally back up off the post of Brexit lows. 109 can't hold. We hover, and now we're starting to make a series of lower highs. pressure to the downside, and the battering of the base here at 108.50 really makes it pretty clear that we could move all the way down to 107.50 as potential support. This is a slow moving trade, but as far as slow moving positional trades, this seems to be an interesting one. Any kind of a bounce back up here would probably be a decent short against this 109.50 support level. Whereas with Euro Yen, let's just go back to sort of levels of how you trade technically. Here, it's almost, you almost can't even see the bounces because it's such a short distance here to the stop. I would just sort of almost go market here with a stop above 1850 and see if the momentum can take us down all the way down to 11500 on that move. And then last but not least, the Aussie is really a positioning trade in front of that CPI number. If you sort of think the CPI will be cool, it's certainly going to break the lows here at the 10600 level. The market is certainly positioning itself for that structure, and 108 is the only level where you would be considered to be wrong. So any short against this move here up to 108 really provides you with still scope for potentially profitable short. So wish you guys the best of luck, the best of trading. Should be an interesting week, both on the major side, but certainly very much on the crosses side. And in many ways, you can look at the crosses, especially the Euro Yen cross, to gauge exactly how the market is feeling about risk and everything else going forward. Boris, over and out.